Hey guys, what's up and welcome. In today's video, we've got the stock market crashing after hours, guys. It's ugly out there. We're going to be going through a whole bunch of charts, looking at some support and resistance lines right after this video. Right now, we have Dwyer saying a soft landing is not going to happen, guys. As always, if you enjoy these videos, smash that like button for me and let's jump into it.
Our next guest says expect rates to stay, quote, higher for shorter. Joining us now, Canaccord Genuity's Dwyer. Tony, it's great to have you on. What do you mean by that?
So Morgan, our whole case this year was that a soft landing economic scenario is the worst case scenario because it does create that higher interest rate environment. We've seen a 25% increase in rates on the long, intermediate, and long end just over the since mid-September. That ensures a recession rather than debate whether you're going to go into one, because that spike means you're going to have that much more of a slowdown in economic activity. So at some point, the higher you go in rates, the quicker it's going to shut down economic activity, and the faster it's going to create to the other side of the mountain in rates.
So you don't think a soft landing is in the cards?
No, I don't. It would be historically unique on the leading economic indicators, on money. There's so many different areas that I see, and I understand that the unemployment rate's still low, but it's 0.4% off the low. Anytime you've been 0.5% off the cycle low, it's been right before or in a recession. So I think, between now and the first quarter, we're going to be in an economic recession. Most stocks reflect it. If you look at the number one question I get, Morgan, is, do you still think we're going to break last October's low? Because as you know, I've been pretty defensive for a year and a half now. And the answer is, so many areas already are. The financials, the Russell 2000 small caps, the healthcare space. There's so many areas that are already beaten up and reflecting a pretty bad environment that as those rates come down, we're looking to get less pessimistic, more bullish. I don't care how you want to phrase it. As the market comes down, gets as oversold as it is, and rates start coming down, that could be a good catalyst.
Well, it's an important.
I will say to that point, small caps have been absolutely deleted. They never got the rebound like the big mega caps did. And now a lot of the mega caps are even down 10, 15, 20%, guys. So we definitely have a pullback. The averages are down almost around 10%. So we've had a slow, sneaky pullback this last few months.
Important distinction, Tony, given that you've been defensive for the past year and arguably maybe you shouldn't have been. So when you say defensive sectors are going to relatively outperform, does that mean they're worth buying here, or just that they're going to go down less?
Well, Jen, I would debate that I shouldn't have been. That if you look back to where the market peaked, the small cap, all these areas are, again, back toward the lows. So the time to be really negative and fearful of the market and just broadly as defensive as you can get was last year when the Fed was moving rates 75 basis points at a clip. The reason I say the defensive sectors now is because they've underperformed so dramatically because of the rise in rates. When you get rates to come down, if I'm right, and rates come down pretty dramatically over coming months, it'll give a little bit of a tailwind to those areas that have been beaten up on the higher interest rate environment.
So do you buy more of those defensive names now?
Yeah, we've been light and tight for a while now for this year, and that basically means a little bit extra cash and a little bit defensive posture. I don't really see any reason to change that until we get that signaling from rates. Even in the soft landing environment, guys, 1995, 2008 and 19, 2016, any of them, you had a dramatic drop in not just treasury yields, but mortgage yields and corporate yields. And we really there's got to be a catalyst for a recovery, not just an oversold condition, but that catalyst. And as I said, I think that's coming in the next few months for sure.
He thinks rates are going to be starting to get cut in the next few months, guys. Like I've been saying in several of my videos, we have so much bad news that it's going to flip to good news when it's time to start taking it off the docket. It's going to be good event after good event after good event. Less pressure on all these stocks. It's going to give them enough reason to soar. You couple that with them being beat down and strangled for the last couple years, guys, it's time for some growth. Now we're going to look into some charts after hours. It is bloody out there, guys. We're going to jump into TD Ameritrade. Look at this. Where is Amazon? Jumped up. We had some sympathy earnings right here. But what is it down from yesterday? Even after hours, what is that? We've got 7.4%, guys. What is it after hours today? We had a negative 5.5% day, and then we're down another 2.1% after hours, guys. Look at the 1 year, 1 day chart. You can see we've got a very nice bottoming pattern here. and it is starting to fall off this 200-day moving average, guys. We've got the 200-day in green, and we've got the 50-day in blue. Then one last chart, we'll take a look at the weekly chart, and we'll do this for several stocks here of the Magnificent Seven. Look at this. This is just a magnificent buying opportunity. Both of them, they're getting the golden cross. It's a good time to buy Amazon right now. Let's go to Google. Google's been absolutely beat down on this last week for earnings. Down. Let's jump into the day. On the daily chart, huge gap down all the way from up here. We're now down here at the lows, guys. If we pull in just a little bit closer, let's just look at the 5-minute today. Look at this massive drop. Just from yesterday, and we're down again after hours. What is that? That's 12%. 11.85%, guys, on Google. They beat on top and bottom. They just did not hit expectations of growth. Now, after hours, Google's down another 2.5% on top of the 9.5% down day it already had, guys. Let's look at the Qs and zoom in on today. We had a negative 2.5% day in the triple Qs, guys. And then after hours, we're down another, what is it? 1%. We're down another percent after hours. What does that look like on the daily chart, guys? The very bottom of this channel I've drawn. You can see we are pretty far off the highs. Let's look at it on the daily chart. We are well into a pullback, guys, on the Qs and the SPY. We can pull up the SPY. Looks relatively the same. The SPY's getting actually hit a lot harder. You can see the SPY broke a major trend line right here, and that's kind of why we're being rejected. If we zoom in, we can see it down today, 1.5%. After hours, it's down another 0.5%, guys. And you know what it was from? Meta earnings. If we check out Meta earnings, this was one of the craziest earnings I've ever seen. Let's look into the 1 minute. So the very first minute, this thing drops from here to here. 5%, 4.8% straight down. Then comes all the way back. We find out that this maybe hasn't been earnings. Nobody could find the report, so it wasn't released yet. Then it drops all the way down again, 5.7%, just to skyrocket 5% to the positive side, guys. Then moves around for an hour, couple hours, and proceeds to come all the way back down. Ending the day at down 3.5% on top of a negative 4% day, guys. That's negative 7% on a Meta right now. If we take a look at a bigger chart, the 180-day 4-hour chart, just straight down. We look at the 1 day, it's not even going to take into consideration where it's at yet. And then we can pull up Microsoft. Microsoft gapped up almost 4% on earnings and sold off the entire day. This is a bigger picture right here. Gapped up, sold off the entire day. It's down, what? A good 1% after hours. It's mainly this indices, guys. These markets are bloody, and it's because of Meta. It's dragging everything down. Google's getting absolutely slaughtered. Look at this. Just look at this. From 140 to 122 in a day worth of price action, guys. I hope you guys enjoyed me breaking down some of these charts and watching that video. If you did, hit that like button for me, and I will catch you guys tomorrow. Peace.